Coffee alongside Kevin Hinks. It's now time for our cash tag segment. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn. And joining us from LikeFolio.com is the co-founder Andy Swan. Guys, kind of a fun conversation here. Sort of a reopening trade, I guess, but also kind of a stay-at-home trade, if you will, as well. Match Group, both kind of the initial pioneer of online dating, and then also kind of a play on the new age of online dating with names like Hinge and Tinder following underneath this company's umbrella.
Yes, because I would totally say that this is a name that benefited from people being home and not really, having other ways to meet people. But actually, it seems like it's much more exposed to sort of this reopening, like you just mentioned, than I would have thought. But it is down over 3% today. And it's actually, if you look at over the past year, right now it's been sort of range bound in 2021, but relative to its 2020 performance, it's actually still holding strong, despite the fact that it's now about $20 off of its all-time highs. Now, they have second quarter earnings today after the market close, and they've seen a really nice streak of beating earnings, particularly in the last 2 quarters when it saw an earnings surprise of about 24%. Now, the street is estimating for this quarter earnings of about 54 cents a share, which would be higher than last year on sales of almost 690 million, which would be an increase of 24%. Now, what's actually really interesting about Match is it sort of has a monopoly on online dating when you consider all of the different brands in its portfolio, those being Tinder, Match itself, Meetic, OkCupid, Hinge, Pairs, Plenty of Fish, just to name a few of some of these biggest online dating brands. And top line this quarter is expected to really be benefited from actually the growth in Tinder specifically, while also honorable mentions include Hinge, Pairs, and OkCupid, which all drove about 23% year-over-year increase in its revenue in the first quarter. So you have to consider 23% revenue increase in the first quarter. They're expecting 24% in this quarter. They are seeing a very healthy level of growth. Now, what is interesting is they've sort of, changed their business model to adjust this year, but they saw such high demand, being that they're charging now certain users higher subscription fees. They're also offering different premium features in their apps, a lot of which are free, but now there's sort of different content you can pay for. And I actually saw a really interesting Wall Street Journal article that talked about the fact they're targeting sort of certain demographics, people that own pets, people that, eat certain foods. They're really just focusing on now developing this sort of niche market in the dating world, which is what our first tweeter today talks about, which says, Match and Bumble are now focusing on niche dating apps as a way to maintain dominance in the online dating world. And specifically, the sort of target groups that this article mentioned were runners, vegetarian, gamers, and even people that are interested in astrology. So I thought that was really interesting and kind of cool because it's something I didn't really know existed, but it seems like it would only have obviously benefit the company. And our next tweeter actually talks about some of this price action and things that are weighing on this stock as of this year and actually as of today, which says, with Delta variant peaking in the UK and likely the same for the US in late August, predicting a long overdue breakout for Match Group, which is the parent company of Tinder, Hinge, and Match, predicting over 190 in 6 to 12 months, barring more variant spikes. So 190 would be bold because I think its all-time high is it's 174 a share. So Andy, I'm very curious because I actually would think that this is a name that benefits from these rising cases because I thought that this sort of served a purpose when people had no other way to meet people, like Alex and I sort of talked about. But now we're seeing it falling sort of with this spike in COVID cases because I think just a lack of social interaction. But then again, I see that as a positive for Match.
Yeah, it could be a positive, although, I've been out of the dating scene for a while, but it seems like you still need some place to go and something to do rather than just, matching up with people and saying hi online. I'm not sure how all of that works, but I do think that Match has, Jenny, you alluded to, really their core strength is their portfolio of brands and the diversification of the ways that they can, essentially match people up. We see one of their newer apps, the Hinge app, really growing very quickly, 173% compared to 2019 in terms of the number of people talking about downloading or installing the app. Tinder's still doing very well. Plenty of Fish doing okay, and then their older names not faring so well. So they kind of have this really smart strategy of putting their bet behind whatever's working and having a lot of different options out there for users. And I think that's key because the dating user is not, exclusive to any one app. You'll find people that are on Tinder, on Hinge, and on Bumble, all simultaneously looking for whatever works for them. And so the more of those brands that you own, I think probably the better, because this customer is a little bit fickle. And so, overall, we see this category up 29% on a year-over-year basis in terms of just the number of people talking about trying to find a date or matching online. And so I think this is a good industry to be in. I think it does work kind of both ways, whether there's a shutdown or things open back up and there's more to do. So I think no matter what, people want to get together, and they're using online methods more and more to do that. So Match is in pretty good shape here.
Now, Andy, the way I look at this group of products is, online dating is the singles bar when we were young, right? And if you go to a singles bar, and if I have 5 singles bars in front of me, I want to go to the most crowded, right? Real simple. I don't want to go to a singles bar where there's 3 people and I'm one of them. I want to go to a singles bar where there's 500 people and I'm one of them. So the question is, when I look at some of these names, now, from what I read, Match is the biggest. So if you want to go to the biggest and see the biggest pool, that's an easy decision. But is Hinge growing so much because it's smaller and getting bigger? Or is it one that this is one that's eating the other's lunch and it's the new place to be? I have no idea, but I'm looking for your data to what it says about these names. Is this just the newest one, and that's most popular, or is it revolutionizing dating?
Well, I don't know that anything's going to revolutionize dating. Dating's been around for a really long time, but it is definitely different. Hinge, I think, is along the same lines as Bumble and some of the others, in that it doesn't want to be the singles bar where everybody is. It wants to be where the quality people are, and essentially a lot of times where the ladies have a little more control over the situation than what goes on either in a singles bar or on a big pool like Match. So, but the growth rate in Hinge is definitely impacted by the fact that it's one of the smallest and newest brands in their portfolio. But I do think it speaks to their ability to monetize and to shift users based on preferences to the brand inside of their portfolio that matches their use case the best.
And I think that's well said. I think there's a bit of a demographic probably play here. I think Match.com's probably a more traditionally or older demographic, maybe been around the traditional online dating scene as it's been for maybe a decade or so. The Hinge, Tinders are probably more the new age kind of online mobile app dating that's maybe gotten the younger demographic a little bit. But one thing that I see is probably COVID-19 and in the pandemic, as Jenny said, is it was maybe one of your only options to meet people through online sources. Maybe normalize this a little bit, which is definitely beneficial for this industry as a whole. But my question's a little bit different. Andy, whenever I look at something and I say, how do they make money? What is the product? And clearly we know why we're potentially going on one of these sites, but is this much more of a data mining advertisement kind of a play and user growth than just buying premium services to do whatever that can have you do on the app?
Yeah, I think so. And I think Jenny alluded to that, very concisely when she started talking about identifying the interests of the users. And so, I'm not necessarily sold on the idea that gamers necessarily only want to date other gamers, but I do think that from an advertiser's perspective, it's definitely beneficial to understand the interests of the user and what ads might speak to them. And so I think you're exactly right. I think for most of these, dating apps, the user is the product that's being sold to advertisers, just like Facebook, just like Twitter, all the social media companies. They do have those premium features that you can add on. But I think the big revenue driver is going to be the data mining play and to understand these users through and through. And if somebody happens to make a great connection, then that's even better for the story. But it's always good to have repeat customers. And last I checked, it's better for a dating app if you keep dating than if you find true love. So that's always a little bit of a conflict there for a lot of these companies.
Yeah, no, I think that's interesting. But assuming that we still have more and more coming up through the ranks here, there's always potentially new users that can get into these platforms. But Andy, kind of wrapping it up here, the stock's kind of been moderately sideways throughout the 2021 calendar year. And so where do you stand on Match Group, which to me seems to be kind of the winner right now in the space? It doesn't mean others can't win alongside it. But are you guys optimistic on this report, or do you have a feeling one way or another?
Pretty neutral in this report. We like Bumble a little more because Bumble's users like Bumble more than Match brands users like that. And so, but I think both companies, all of these companies, have a massive tailwind behind them. In 1995, 2% of people met online. It got up to 39% in 2017, well before the pandemic. This tailwind was here for this industry, and I think it's here to stay.
Good stuff. Co-founder of LikeFolio.com, Andy Swan, thank you as always.